Okay, hello everyone and welcome to another FXChoice technical analysis webinar with Trevor Neal. Thank you for joining us. As always, we'll aim to take up no more than 30 minutes of your time, but we may spill over by 10 minutes or so, so please bear with us. Just to remind you that if you haven't done so already, please, we strongly recommend you download the handout from the Handouts tab when you'll go to webinar widget, especially if you're new to trading. It'll help you understand the different indicators that Trevor's using and why he uses them and what he's thinking about when he uses them. For those of you who don't know Trevor, he's a technical analyst and trading veteran with more than 40 years in the business. He was global head of technical analysis at Bloomberg and a founding member of the International Federation of Technical Analysts, so technical analysts, I should say. So before I pass over to Trevor, if you have any questions for him, please ask them in the questions tab of your GoToWebinar tool widget thing. You should be able to type your questions in there and I'll see them and pass them on to him. Please keep the questions on topic, and if we don't get round to answering your question, please feel free to send it to webinar@myfxchoice.com. That's webinar@myfxchoice.com, and we'll pass those on to Trevor. So without further ado, Trevor, off you go. Over to you, sir.
Okay then. Thanks, Dan, very much indeed. Pleasure to be back here today. What a big day today. Lots of big swings. Actually, this chart doesn't really show it, but some big swings elsewhere. But we've got some theme movements here. Previously, we were very bullish of the dollar, and to varying degrees, currencies were bursting up against the dollar. Now, I think there's a bit of a move towards the euro itself having a lead. So it's not just a dollar game, it's the euro on its own has got strength. So we see that in the euro crosses. I'd like to just show you this chart that we used last time, the RRG chart, if I can get it on here again. Sorry about that. There it is there. So this is the relative rotation graphs of currency pairs, the G10 currency pairs versus the dollar. So for those of you that are seeing this for the first time, what we're doing here using relative rotation graph is we're plotting on the x-axis here, things which are furthest to the right are the things which are strongest versus the dollar. So Norwegian crown, New Zealand dollar over far to the right, outperforming the US dollar. Everything is outperforming the US dollar. Japanese yen really going in the wrong direction there, so it's a laggard as the dollar is weak. Here's the euro, and it's not as strong as these other ones here, but it's really shot forward extremely well in the last few days. Each dot here is a sample going back day by day by day. So if I go back here, that's going yesterday, day before, back in time towards now. And so we've seen how, look at the euro, how the euro, you see it over here, how it's come forward in the last week and shot over here, heading northeast.
Hello. Hello, Trevor. Can people just write in the comment section if they can hear me, please? Okay, I'm hearing that people can hear me, but not Trevor. I apologize for this. I really don't know what's happened there because I can see Trevor's screen, but it seems like Trevor's frozen. Yes, I can see that people can hear me. I'm not sure what's happened there. Let's see if we can get Trevor back in action. but for the time being, I'm not sure if it's going to work. 1 second, please. Technical difficulties. I can see his mouse, but I can't hear him.
And
Trevor, can you hear me?
Yes, I can.
Trevor,
Can you hear
we've
me?
just lost you. Yes, we have. I can hear you, but I think you might have been talking for quite a few minutes there, and we couldn't hear anything. I think you froze.
Oh, okay. Did you see the RRG chart? Did you hear me talk about that or
Yes,
not?
but you cut off about halfway through there. I apologize, Trevor. Is there any chance you can go back and explain that again? Because I think
Yes, of
that
course.
nobody could hear. You just your screen just froze, then you froze, and we couldn't hear anything except me, I'm afraid.
Okay, I did get some messages that the screen had frozen, but I just talked on anyway. Okay, sorry. So very briefly then, this is a relative rotation graph. If you want to see it, you can go on to relativerotationgraphs.com and go on to RRG online if you want to see exactly this chart. There are various different versions. Crypto one might interest you, but this is the G10 currency versus the dollar. Here is the US dollar here. So everything's on the right of the US dollar. This means that everything in the G10 is outperforming the US dollar. The US dollar is weak. There's a picture of it being weak. The strongest is the Norwegian crown, New Zealand dollar also, Swedish crown, Australian, and so forth, and going back. And if you want the worst one, which even that is outperforming the US dollar, is the Japanese yen. So this will help you with your pairs crosses. So probably something versus the dollar is going to be good. Maybe versus the yen might also be good. But on the vertical axis up here, on this y-axis here, things which are going up and are high. So the euro is actually the highest. The Norwegian crown is most to the right. That means it's most outperforming. But the euro has got most positive momentum. This is where you get outperformance, is by not buying the things which have already arrived, but buying the thing. Are you hearing me again?
Yes, I can hear you fine, Trevor.
Oh, okay. I just got your message. Are you there?
Sorry, that's delayed as well.
Even that was delayed. So the euro is going in the right direction. It's heading northeast. If you look on this, if I go back a week, watch the euro here. Here was the euro a week ago, and look at the journey it's made during this week. Here, see, shooting forward, higher and further to the right. And this looks like it's going to continue in that direction. Swedish crown too, but the euro is higher. That means it's got more momentum. Swiss franc also high, got more momentum, but not as strong. So this is giving you those two dimensions: strength versus the dollar, and also positive momentum versus the dollar. And things with most positive momentum are the things which are likely to go further. That is the euro and the Swiss franc. Nothing wrong with holding these ones. If you're lucky enough to have those ones, they're doing great. And the Norwegian crown is still heading east, which means it's increasing its outperformance of the US dollar. So let's look at these charts more conventionally now. So here's the euro, here's the big break of the range. Let me try one more time going, yes, here's the weekly, and here's the range which held us since July, 116 up to 119.50. Big breakout last week when we were talking this time last week. We were making that breakout, and that looks set to continue and head further to the upside. And if we look further out, where does it get resistance? If I put up longer data here, you can see that we've got some resistance coming in around 123 area up to the high there, but it's not heavy resistance. No surprise, as we said before, that this move would be quick because there was very little resistance here. But we're approaching some resistance, but still further to go before we get into any serious resistance. Now, sterling. Big swinging day on sterling, lots of talk and things happening. But those of you that are candlestick people, what have we got here? We've got maybe not the smallest body, but we've got a small black body here, less than a half of the body of the whole candle. Big Takuri here, big downward thrust and then rejection at that low. So a massive bout of liquidation during the day, taking us right down to 132.23, and then bouncing strongly. Look at the length of that shadow underneath. That's actually very bullish from a candlestick point of view. So this is a bullish candle here now. So clearing out a lot of weak longs in the process there, a few stops going, and then rejecting the lows quite strongly. Of course, we haven't finished the day yet, and it could finish somewhere else, but that's the message if this candle were to finish here today. Now look at the importance of this level here. With this level at 133.50, 1, 2, 3. I'm tempted to make some pun about the 4 tops here. So we've broken the record of the 4 tops. Hopefully we're sitting on top of that, and that is becoming support. Those 4 significant resistance levels are going to become support levels, and we're going to push forward. And again, like the euro, when the euro break, there was very little resistance here. The resistance doesn't really come in seriously until just below 140 here. So I could see if this really takes off, that the move upwards could be fast. We have to be wary, very wary, of course, because this could be just another 5th top, and we have got a bearish divergence in there on the weekly. So don't ignore that. But at the moment, we're sitting above the level and above the previous bodies of the tops. And so those, to me, have become resistance, become support levels. Euro, that's steady, not much to say about that really. Euro sterling, it's powered ahead here because the euro is taking the lead now, and it's pushing up, breaking the downtrend line here. So as I said right at the beginning, the emphasis and power has moved quite a lot into the euro itself rather than the weakness of the dollar. Now here's a good one. We talked and talked, didn't we, all the time about the 90-cent level and the importance of that, but now the Swiss National Bank has allowed it to go, and so we're now lurching to the next level on this, which they will probably allow as long as it is orderly. We have to go back a long time to find where the support points are here, and this is going back to 2014, 2015 levels. So I do think that this could take the lead, shoot around on the RRG chart, head up and to the right, and we did notice there's good upside momentum on this, so I expect that to continue. Norwegian crown, remember this is a great one here, and let's go to the daily chart of that now. I'm bound to say, you know, a long time ago when we broke this double top here, broke the pivot, the pullback point, these 2 lows here, I drew this line in here. I measured from the 2 tops to the break point. I measured down to this minimum price objective. It seemed outrageous at the time that surely you're not suggesting we're going to get down to 870, let's say 869, 8.5 ish, and that's what we were calling. Actually 870 was the call. This was put in when that broke. We broke down, retested it, and we've moved down here. This is one for your technical analysis album of beautiful chart patterns. This is, if you ever have to teach technical analysis like I do, bring this one out as a real classic. Double top, break of the pullback, retest of it, and then dribbling away dollar weakness and Norwegian crown strength, and now reaching its objective, and which I noted at the time was also this low here at the beginning of September too. We are very deeply at very low levels here, but there's no bullish divergence, so you know we can go further here, but it's pretty stretched. Some of these things are quite stretched. Now the Japanese yen, as you can see, is lagging really. It's the least responsive to the dollar weakness. It's showing it there, that's for sure. Let me just show you the weekly chart. Here it is under pressure, continuing under pressure, breaking these lows here, but it's not got the energy of the other currencies versus the dollar. Canadian dollar. Now this is. Let me go back, get this a little bit shorter period here. Let's make some sense. So we've broken the major support level that we've been talking about for ages here, this zone centered on 130, and we've broken here, and this now can go further, I think that it will. It's very low in the RSI, but it's still pointing down, still no bullish divergence, and so, you know, let's say the downward pressure for the dollar against the Canadian, or strength in the Canadian, is still looking like it's there, and we can go further in the short term. The Australian dollar, same picture here. Australian dollar, of course, it's the lead one here, so it's going up. It's broke its high of the beginning of September. Show you the weekly chart of that. So this is breaking here. This important level here. Oh no, that's why it doesn't make any sense. For some reason it decided to. You have to watch that, otherwise it'll make a fool of you. So we had that triangle. We talked about that a lot in the past. We broke out of the triangle just about a month ago now. We've been moving ahead here. So how far can we go on this one? Well, I'm going to do this. I'm going to use Fibonacci to set a minimum price objective on the upside for this. I'm pretty bullish of it. So I'm going to take this level. One day we'll get a chance to talk about why I'm not choosing that spike low. I'm going to measure up to here, down to here. So those are the A, B, C points of it. So look at that, 85 here. So the call for long impulse move here, very weak pullback here, long impulse move here. Very bullish for the Aussie there. So I do think this is a reality, and mark my words for that. But obviously that's very much in the long term. We're just clearing this top now, and it should take us through. What's in the way of this getting there? Again, so, you know, really we got the big double top here, which was the top of the market in 2018. Breaking that would be very bullish indeed, and give us a clear blue sky if we get through that. Okay, obviously there's lots of resistance before we get up there, but I think that this weak swing pullback against that very strong impulse move means that the next leg will also be extremely strong. It's going to be not a straight journey, of course. New Zealand dollar, which of course we like a lot, and this is the weekly chart of it here now. Impulse, reaction, impulse here. I could do the same here, which would take us through these highs here. We've cleared these tops here from back in 2019. We've got a relatively frictionless ride up until we get up until really this area here is where the resistance begins to come in. So I think that we should go really to 172 relatively quickly, and then after that we meet serious resistance. But look at the RSI, very powerful, moving up, no divergence, making a new high. It's pointing north, this. And then the two high beta plays of this is the South African Rand. Here's the weekly of the Rand. It's of course going down as the dollar going down and the Rand going up, and but it is approaching quite a significant area of consolidation, even more so in the Mexican peso, which we're going to look at in a minute. But look at this here. It's still ahead of us, so still lower in the chart, but it's going to be, that should soften the blow. But no indication of it happening yet. This RSI is still pointing down, no divergence, still very weak. And you know, the daily chart also looking weak. There is a bullish divergence in here, there, which would indicate some short-term pausing in this rather extreme situation that we've got into. But it's this has been a leader, a powerful leader. If you were lucky enough to be short of the dollar versus the Rand, you've done better than most other things. And best of all, the Mexican peso, if you were participating in that. We've had the bullish divergence here, but it's been broken now. But I just want to draw your attention to the support we're approaching there. Don't why it keeps obviously not paying enough for my Reuters. We're approaching this big area, I mean multi-year area of support. We're not quite at it yet, but soon it will find dollar support coming up. But everything points to us going towards and deep into that area before we find serious support. Now, Bitcoin. Okay, look at this. So we're testing, I would say still testing. I know we've breached it, but we haven't really gone through the December 2019 high. But everything looks like we're going to push forward from here. Would be natural to hesitate a little bit at the old high. MACD weekly is positive. The RSI is still looking good here on the daily chart. So on the shorter term, we've got some degree of hesitation. Here we are pausing a bit here, so we could form some sort of pattern here, triangular pattern I would suggest it's likely to be, while we get used to the idea of being at a really truly at an all-time high for Bitcoin. If we can clear that, then I think we're pushing ahead very strongly from there. So if it were to stop, this would be an obvious place for it to stop, but really I think it's just having a natural pause at a very significant technical level, the previous high. Right, moving on to the stocks now. Well, before we do the stocks, let's do the commodities, because I do want to talk about gold. Gold is steady currently and moving back towards this consolidation resistance at 1860 area, and we've come back to that. But I just want to look at a bigger picture, show you something about that. The allure of gold, the attraction of gold looks under great threat to me right now. So if I show you here in this chart I've made, this is a chart of I can't show it to you. What has happened to this? Oh, there it is. It's decided to come back. It keeps, whenever I do well, I don't know why it keeps picking up another security. But this is a chart of gold divided by the US 500. So rising here means gold is outperforming the US 500, which it did right into 2011. Then from 2011 to 2018, it underperformed. So you've been better being in stocks than in gold. But in in recent memory, from mid 2018 to now, it's better to have been in gold. Gold has come back into focus and it's become shiny again, and that has been the dominant theme. But it's under severe threat here now. We're just testing this uptrend line here. This is a relative chart. So all I'm talking about here is not the price of gold. I'm talking about the price of gold relative to stocks, to the stock market. And it could break here, and that could then continue this longer term underperformance of gold versus stocks that could be about to resume. So watch this very carefully indeed. This is gold divided by the S&P. Rising means gold is better than the S&P as an asset class, and it's under threat here now, could break or maybe not. But as I said, at this very moment, gold is quite steady and retesting what I think will be quite stiff resistance from 1860 upwards through this area here up to 1880 there. So it will find it hard to push forward from here. So I'm not so sure at all about gold anymore. Crude oil shot up powerfully, and this is WTI crude, and we've had a good run. We had a small pause here a week ago, but last week it was strong. Small divergence in the daily chart here that may not develop into anything other than a short-term pause, because I really think that this has really got not much, well, nothing at all in terms of resistance between here and $50. So I think that it can make this move to $50 without much to stop it. There's no profit takers in between. The resistance above $50 is very, very stiff indeed, but it should continue to progress upwards. So now let's move to stocks in the last 5 minutes here. And well, we're pushing ahead. Here is the US 500, and I've got a Fibonacci projection of 4,000. It comes out at, so how did I do that? Just to let me show you that. I'll do it again. I took the low of March here, and I came up to the high here. Then I came back to this low here, and then I measure up from here, 4,000, more than 4,000, 4,500. So, you know, we're in blue sky here. There's no resistance, previous resistance to look at. And we had a very, very powerful move up from that, you know, from that March low. Then a very weak pullback. When the bears had their chance, they achieved very little indeed. It was very brief and very strong up move. This means the bulls are very strong and the bears are very weak when they had their chance. So this does indicate this leg should be substantial. The Nasdaq has finally made a new high, but it is really dragging behind. The constituents of the Nasdaq are a bit mixed. You know, some are doing quite well, but some of the big names are not. I'll show you some of the big names that are not in a moment. So whereas every FANG plus stock was leading the charge, it's quite a mixed picture now. Here's the Footsie, and the Footsie, you know, is looking good. So if we look at the, I'm going to take that off now, whoops, that Fibonacci off now. Now what happened there? Right. My machine's having a little bit of a time of its own. All I wanted to do was get rid of that Fibonacci line there. So we've broken this important high here, the June high. We've cleared that now. This becomes support. I do see this as a flag here. That's not US tech. Just get rid of that. And I am bound to go to Fibonacci again for this. Even if I take this low here, pull back here, A, B, C, where's D? D's up at 7,100, around 7,200. We come into this extremely strong resistance of the 2019, where we made these three tops over most of the year, really half of the year there. So I think that's going to be considerable resistance, but there's nothing here. We fell so fast here that the move up should be frictionless. Looking elsewhere, not so happy. The German 30, soon to be 40, is finding resistance at this unusual gap here and the previous high. I haven't got time to go into the stocks, but it's a very similar picture. Japan looking brilliant here. It's a really, really terrific. Let me just remind you of the importance of this level. This was 2017 high, 2018 high, 2019 high, and we've powered ahead. And so when I draw these Fibonacci levels like I've been doing here, and it all looks quite extraordinary, well, this was another case just like that. You know, impulse move to here, pullback, very weak pullback, very powerful move, very weak pullback, and we're on our way now. And this gives us 28,700. On the basis of this very weak pullback against that powerful impulse move out of the lows back in March there. So just got a minute to go to briefly go through the stocks. We have got this general rotation into the rebound trades, the airlines, the banks. These securities are, you know, were so heavily sold, and we've got to say also many of the tech stocks were very overextended on the upside. Look at Apple now, and look at this on a daily chart. Apple's really doesn't look really that good at all, does it? And some of the old names that we've so much liked are really looking quite soggy as a picture. But when we look at things like Bank of America, for example, it's making new highs. Who'd have guessed it? Ford powering ahead here. You know, who wants to buy old-fashioned cars that are driven by diesel engines and petrol engines? But apparently the stock market loves that. We still got some exceptions. Uber is a notable exception. So it's making new highs terrifically, and so is Tesla too. But otherwise, the high-tech stocks are lags, and old-fashioned things like Total. Do you remember we recommended Total back here on this bar here? That's had a pause now, which I think is now complete, and it's on its way to make another leg. I'll be going A, B, C for that and bringing out new objectives for that. The banks, BNP, it's a lovely one, BNP there. Let's say a tech stock for Europe, SAP. Horrible, horrible. Lufthansa, who'd have thought, an airline, you know, and here moving up nice and strongly. Daimler, we liked Daimler, if you remember, and we liked Daimler around this level here, and this is powering ahead, making new high. Santander is the best of all of the big European stocks. Look at that, it's just beautiful, moving ahead, and it really started at the beginning of November, that move upwards. And look how much it has got without friction. It can go up to 340 area, up to 4. That area it's the first time it comes into resistance, so I can see this extending further there. So Glencore was one we said last week we liked, and look at that. I mean, that's a really beautiful chart. 2 weeks ago, actually, we said for Glencore, and it's punching hard into the resistance. I picked up there's resistance here at 220, but it's really like a hot knife through butter there. Look at this RSI surging ahead. Perhaps it's taking no notice of it. Certainly breaking that downtrend line there. So finally, my stock is BATS. You know, again, very much an out of fashion British American tobacco. We've put in a series of lows here. I think we're starting to break up in this. Let me go to a daily chart on that. So we're approaching 2 resistance points here that are very, very close in here. 28.50 is the level. We're very, very close to it now. There, if we can clear that, let's be precise about it. It's 28.61 or 65, that area. If it can clear that, I think we'll have another big swing up on that, and that's another completely out of fashion security, which is having this big bounce trade. And so the action is in the bombed out airlines, banks, tobacco, securities, and yet the high flying securities like Apple and the other big tech giants are not underperforming. They're doing okay, but you can do better from these recovery trades. So the market is thinking way beyond COVID now. COVID is behind us in the vision of the market, and so it's moving into securities which were so hard hit by COVID. All right, Dan, did we have any questions?
Okay, no, Trev, actually, we haven't had any questions today. I think you must have covered everything for everybody. Thank you very much. Please join us again, everyone, next week, same time, same place, and we'll have another technical analysis for you next week. Trevor, do you have anything to add before we go?
No, I think the only thing I haven't said that I would have liked to have said is that some of these things are very extreme readings. You know, I'm not when an RSI is high and going up, that means it's strong and getting stronger. That's exactly what it means. It's not a reason to sell it because it's strong. However, any sort of wobble in the momentum is going to send that RSI down sharply. So we're at stages where I wouldn't be surprised if this time next week I'm talking about some of these either pausing or correcting. But overall, I don't think that will damage the longer term bullish outlook for many of these things we've been talking about here.
Okay, well, thank you very much, Trevor. I think that we'll see you next week, everybody, the same time, same place. Thank you very much, Trevor.
Yes, thanks, Dan. Thanks very much. Bye-bye. May the trend be with you, everyone. Bye now.